Okay, welcome up there, guys, to Gino's Gems. I'm going to show you how to make a great dividend return and do covered calls and be in one of the best market beaters breaking the average of the market of all times. It's called ETFs with great dividends, specialized ETFs, covered call ETFs, some of my favorite. These are actually investment ones. What I'm going to bring up is 3 ETFs. And let me just show you what this stems from. Now, this isn't a recommendation. What I'm telling you is go look for specialized ETFs. They've got some that do what you want them to do. And I'm going to go to a daily chart here, and I am going to just show you a couple really cool ones that specialized ETFs. Now, specialized ETFs means they designed them to do something different than just buying a bunch of stocks, okay? So basically, specialized ETFs are, you got to look into them. You could Google them. Let me show you what I got here. So when you go into, let's say, the spiders, that's a cheap way of buying the S&P. So you don't, that's the only way to really buy the S&P, right, is to buy the spiders. Here's the S&P. And by the way, if you look at the stats, most money managers cannot beat the S&P. Think about that. Most, I don't know what the percentage is. It's like 70%, the majority. Their portfolios can't beat the S&P. So stock pickers have a hard time beating the S&P. They call it breaking alpha, beating alpha. Beating the S&P means you're seeking alpha, right? You're trying to break that. Now, if that's the case, then why don't we just go out and buy the S&P, right? Because if you buy the S&P, you are the market. You're the guy to beat. You are the baseline. You're the one everybody's looking at. You are the market. The market is, and the S&P is an ETF. And the S&P spiders is a cheaper way to buy the SPX. It's 1/10 of the price of the S&P. But it is $360 a share. So some people are like, you know what? A real simple strategy is buy 100 shares and go over here and sell a call. You sell a call against it. There's weekly, there's monthly, and you can do it every month. Now, this is a strategy done by a lot of people. I'm just going to go here to the at the money calls. You buy the stock and you sell a call. Now, by the way, you get the dividend of the ETF. And I'm just showing the spiders because this is most popular, 1.31%. So, a lot of us have done this. You buy the, now if I want to do the Dow, I go in there and buy the diamonds. I own the Dow, and here's the chart. It's 1/10 of the price of the Dow Jones, because you can't buy the Dow Jones, really. You can buy, and by the way, the indexes, the markets are an ETF in themselves, and this is the ETF for the industrials. But here's the thing, it's $300, right? Well, check it out. Let's talk about those specialized ETFs. There's one out there. Let me just talk. I'm just going to throw a few of them out there. Let's go to QYLD. This is the triple Qs on the Nasdaq, but look what it says. It's the Nasdaq 100 covered ETF. They basically go out there, they buy the triple Qs, which is the Nasdaq 100, and they do it for you by doing this. They buy the stock every month, and they sell an at-the-money covered call in the ETF. Think about it. They do the covered call for you. You just buy, and it, by the way, the triple Q, 269. But what is the QLID? QYLD, we call it the QLID. The QLID, QYLD, is the Nasdaq 100 covered call. They do it. You don't have to sell the call. They do it for you. Now, here's the chart, just like the market, but notice it's only 15. It's under 16 bucks a share. So it's easy to buy a couple shares here and there when you start looking for market bottoms. Here's the advantage of it. That covered call is kind of like a dividend. They give you the money, the covered call premiums, the profit, the extrinsic value, that covered call money, they give you that cash flow. And you get the dividend. So check it out. It's actually got a 12% yield. That is 1% roughly per month. That is so much better than a bond. And by the way, I have a feeling the market's going to be around a long time. So it is like buying a bond. They pay you a dividend every month. And there's a distribution every year. So you're getting the covered call cash flow, and you don't have to be there They just routinely do an at the money covered call. And what's neat is I could come in here and sell naked puts against it. I can sell calls against something already doing calls, but very hard to find a very secure dividend. That right there, guys, 12%. Let's look at another one. Let's look at XYLD. XYLD is the S&P 500 covered call ETF. You buy the market, they do the covered calls. So your ETF, the manager is doing something there. He's doing the covered calls for you. And what does that pay? 12.5%. And let's finish with RYLD, the RYLD. The RYLD is, of course, the RUT, the Russell 2000. It's also at 12%. It's just nice to see cash flow hit your month. Now, could you do covered calls on those ETFs yourself and make a better return? Absolutely. But this is one of those things where it's a cheap stock, under 20 bucks on all those, right? Where there's no excuse not to buy a couple of shares and make 10 to 12%. And going back through history, go back and check it out. For the last 12 to whatever years they've been around, they've continuously produced high dividends because of the covered calls, usually in that 10 to 12, even higher, and volatility is high. So you start cost averaging it. It's just like buying a bond, but way better cash flow. You get paid monthly, not every year. So guys, that is a little Gino gem out there. There's a lot of these specialized ETFs. Check them out. Do your research on them before you decide to buy them. I just want to throw it out there. I love these things. It's a very passive way to trade the markets. There it is, guys. And by the way, leave this one little Gino gem. What would happen if somebody bought this covered call ETF for you when you were born? Go put that on the calculator. If you were getting 10 to 12% a year interest in reinvesting it, figure that out and you'll go, wow, that is a gem. So add that to your pile, guys. See you next time.